Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. When does a market stop becoming a market? Well, a market is theoretically a place where buyers and sellers come to set prices. And yet nowadays, that's the least of what a market does. It's just a propaganda point. And that's why we have on Ranting Andy Hoffman. It's Monday, October 1st. And October is that month where people really need to be aware. Andy, good to talk to you again. I'm in this moving mode and things have just been totally crazy. Hard to keep up with the market and everything else going on, huh?
Right. Well, as you said, it's not a market. And I think I am going to coin the term Dow Jones propaganda average when I wrote a piece maybe 6 or 8 months ago.
I remember.
and I think I'm going to actually patent it because it's so apropos. The Dow Jones is only in business for one thing, and that's so it can be propped up so people can say that things are doing well, and propped up when things are doing badly to say that they're discounted. And as far as all the other markets, the Dow is held up by the President's Working Group, the bonds by QE, and LTRO and all those other mechanisms, the gold and foreign exchange by the Exchange Stabilization Fund. I wrote a piece several weeks ago called what I call it, mainstream or something, mainstream manipulation, because everyone knows this now. It's pretty common knowledge.
Hey, remember a couple of weeks ago, we were watching them, actually it was about a month ago, we were watching them knock down the gold price and the silver price as we were talking, as I was interviewing you, and there were waterfalls. Markets, unrestrained free markets don't work that way. But these markets have certainly lost their way through the woods, and I guess the powers that be don't want it any other way, which explains why position limits are now a thing of the past. They're theoretical. They ain't going to happen, are they?
No, I mean, look, even today, where we're having a nice day, it would have been a lot nicer, but they did the same patterns at the same exact times of day as always because they're desperate to prevent the inevitable from happening. I mean, look, we have an election coming. And trust me, Obama's team owns the markets now. I don't mean him personally. His team is making sure that it does what it takes for him to be president. And after he gets reelected or Romney comes in, whoever's there will do the same thing to try to, keep things going a little longer. As far as what we've seen in the last weeks, months, it just gets worse every day. And as you said, it's now October. There is unrest starting to happen in Europe. The markets are not going up all the time as in the summer thin markets, like the bad guys had wanted. And who knows what's going to happen in the next few months.
That's a good question, but we certainly see a lot of unrest throughout the world, and it's spreading to the Western world, and it's got to make you wonder where it's going to end.
And I apologize. You were asking about position limits because I'm so amped up. I've been up since 3:30 this morning, and we're talking, of course, about the Friday decision, not even by the CFTC, but by some court in the District of Columbia. And they quote throughout the case with position limits, and I'm thinking, wait, this thing's been going on with the CFTC for years. How would it get in the courts? Isn't this the Remember we had the CFTC was going to make a decision on silver manipulation, which never happened. Now it's courts making decisions on all these things. So, when that came out Friday at like 10 minutes before, I said, of course, the only reason they're putting this out, everyone knows it's going to happen. They're not going to do anything. They put it out late Friday so they could try another one of their Sunday night sentiment attacks like they did last week. And last week it failed, and today it more than failed. At the COMEX Open, silver jumped $1. I've never seen it do that. And even after they've held it down at the typical 10 o'clock a.m., it's still coming back and still sitting right up at that $35 level. The fact is they are trying everything, including that CFTC rumor back in August that came out on a Sunday during the Olympics that there was they were making a ruling against the silver manipulation. Everyone knew that was a lie. They were just trying to attack the markets, and it's all failing. That's the whole point. The physical market is overwhelming them right now, no matter what they try.
So it's fair to say that we no longer have in the truest sense, markets, right?
We haven't for a long, long time. I mean, in every day, look, my motto, I've been in precious metals 10 years. My motto, I created it back in my mind in 304. I said every day worse than the last. And it truly is. If you're talking about the amount of intervention in financial markets worldwide, but particularly in the States, is beyond that. We're talking about an exponential increase every month in what these guys are doing.
Yeah, I would refer to them rather than as market averages. I would call them propaganda indices or indexes, because that's all they do. They're measuring the efforts used by the elites to try to put forth a perception of reality, of economic reality that you know in your heart, that you know from watching everything is just false.
Yeah, there was a great article in Zero Hedge a few weeks ago. I put it in my rant, and it had an amazing chart. I don't know if it went back 5 years or 10 years, and the chart plotted the S&P 500 against whoever wrote this, against changes in economic expectations. Meaning, if let's say you have some worse than expected employment numbers and manufacturing numbers, it would show how the markets would react. And for the entire first 5 or 10 years, perfect correlation. If the economic data was better than expected, the markets went up and vice versa. All of a sudden, a couple of years ago, a complete and utter split. The data is still, to this minute, plummeting compared to expectations, yet the Dow or the S&P just keep rising and rising. And, look, we know that the retail participation has been gone to zero. Everyone's left the markets. Hedge funds are drying up. There's no one left in the market. We know now that the HFT funds, our HFT programs, are 75-80% of the trading. There's no one left except these government computer programs. And even better than that, you see that the earnings don't match. So even the 30 Dow companies, look at Caterpillar, what they just reported. They're in the Dow, and we're talking about horrific earnings, and yet everything just keeps going up every single day.
Yeah, isn't that remarkable? So we're really looking at they still think that somehow they can convince you of reality and what Jim Sinclair calls MOPE, management of perspective economics. But when you're on food stamps, when you're out of a job, when your kids are living in the basement and will live there for probably the rest of your life, all of a sudden that perspective starts to wear very thin, and reality kind of dawns on you that, hey, you know what? I don't think things are getting better. In fact, I think they're getting worse.
Yeah, and I've been saying all along, I shouldn't say all along, but I've been saying probably the last few months that people really are not even paying attention to the Dow. It used to be people did, and the reason was that, well, everyone had some kind of wealth that they wanted to protect and see how it was doing. Oh, the Dow's up, my IRA went up a little. That's great. The country's doing well. As you said, everyone's on food stamps, unemployment. There's inflation, all these things. People don't look at the Dow and say, oh, I wonder what the Dow did to see if America's doing well. No one could care less. We've seen this summer, we saw the Dow sitting near its highs, propped up by Apple, which is basically, I think it's like 30% of the NASDAQ, while European markets were falling to lows below the 2008 lows. And we're supposed to believe this stupid average of 30 stocks, which isn't even the same average as it was years ago. Let's put GM and Citigroup and AIG and Eastman Kodak back in it. Guess what? It'll be 10,000, not 13,000.
Yeah, don't forget one of my favorites. Xerox, I think, was in there. A whole bunch of companies that have ceased to exist. And then certain companies have done these reverse stock splits because their shares went so low in order to stay in there. And look at GE. It's a word of the state. Edison, even though Edison really hated the company, but J.P. Morgan certainly would be rolling in his grave.
Yeah, I mean, GE was bailed out in 2008 with the same way as Goldman Sachs, the pretend Warren Buffett investment, and then the secondary offering. Look, there's still, I don't know why no one talks about it. There's still a major derivatives player at G Capital. It's the same thing. I mean, why not put Berkshire Hathaway in the Dow, right? And why not put Apple? If you put Apple in the Dow, it'll be 17,000 tomorrow, right? It'll probably. Actually, I think the Dow is price weighted, so you couldn't do that. But you certainly could do it for the S&P 500.
Oh yeah, for sure. And yeah, that's the thing. What I'm talking about. There's any more a market. It's all just smoke and mirrors, which means there's only one place that you can safely put your money, right?
That's right. And do I need to say where it is?
If you're listening to the show now, if you know what the financialsurvivalnetwork.com is all about, you probably don't. But if you just tuned in, tell them what it is, Andy.
It's physical gold and silver, which, by the way, I mean, if you talk about physical gold, as we speak, is at an all-time high in euros. I said for how many months now, I said it's the most massive bullish pennant formation I've ever seen, and it was caused, of course, by the cartel holding it down for the past year. I said once it breaks out past that level, you are going to see fear in the streets in Europe of people seeing their currency collapse. And sure enough, gold has taken off since then. And I don't think there's a chance that the cartel is going to make a dent in gold until it makes an all-time high in dollar price gold sometime in the coming months, maybe even weeks.
Yeah, I think once gold takes out 1,800, which could be literally you could sneeze at your workstation, and it could be at 1,800. And once silver takes out 35, boy, they seem to be fighting $35 silver tooth and nail. But once you see those two things happen, and I believe if they don't happen on the same day, they're going to happen within a day of each other. It's Katie bar the doors, even though I hate that expression, but it's it's too folksy, but it's very apropos here because the fact is it's failing to not just manage the perception, but now the reality is getting away from them, and you're going to see this soon. I'm convinced. I think you're pretty convinced of it. Everybody I talk to, those two numbers seem to be very important. We're going to see new nominal highs in both metals, and it might not happen in a straight line because, prices will go up and then the market's a little overbought, as they say, even though we don't have a market, and then they knock it down a little bit. But it will happen much faster, I believe, than anybody out there is predicting.
Well, I'll talk to you about those two numbers. And again, ignore those words overbought, oversold. They have no meaning at all in these markets, as we say anymore. They're completely rigged. I haven't looked at a short-term chart in years, especially in gold and silver. And I assure you, especially, again, look at the open interest compared to the prices of gold and silver in the COMEX exchange. It's plummeting.
Yeah.
There's not like millions of traders in there saying, oh, I see it's technically overbought and oversold. It's massively oversold long term. That's all that matters. And when we talk about 1,800, look, we hit the all-time high last year. The world was falling apart. We had an election year coming up, and frankly, just the necessity of keeping the system together. They've done a year of attacking like I've never seen. They did Operation PM Annihilation last September and Part 2 in December, and then the Leap Day violation. It's just been nonstop. And the fact is, because of this capping, they create these massive, massive technical formations that they don't realize. It's the inadvertent result of, for instance, trying to hit silver down 1 million times. And what did they do? They created not what I call an octuple bottom at $27 an ounce. It's never going below there. In fact, I said it would never get below 30. But then they did this whole year of attacks, and all they could get it to was 27. So they created that. They also create, these massive, massive ceilings like the one we've seen in Euro Gold. And when they break out, they become massive, massive floors. When it comes to gold, they hit it at 1,800 last December. They hit it at 1,800 last February with the Leap Day violation. They just hit it again recently. So you're talking about a massive triple top breakout when it goes above 1,800. And when it does that, it's going to go flying up to 1,900 like no one's business. And the same with silver. I don't know if 35 has as much meaning. It's probably more like 36 or 37 if you look at the same metrics in time. But I think it's really just more of a psychological number, because once you're in the upper 30s, all of a sudden people have 40s on their mind. And I don't need to remind anyone that's listening to this about the ultimate quadruple top breakout, which takes silver back 100 years to 4 times hitting $50 an ounce. I think when silver this time goes above 50, I think you're going to see it. You're going to see a plummet in the gold-silver ratio as people realize that this thing is for real.
Yeah, and the way it's going, I don't think that ratio will mean much except between the two. As far as the ratio in currency goes, I think that's going to become less and less important over time, and it'll just be how gold trades against silver and vice versa. Anyway, Andy, we find you at milesfranklin.com. Anybody's got a question or is interested, Andy does his daily blog. It is must reading if you really want to understand what's going on here with your precious metals investments. Not saying markets, because once the metal's in your hand, it's no longer part of the market, which is a good thing. And then you can go to financialsurvivalnetwork.com, find out what's going on all over the world, latest news. Check out Andy and my discussions going back months now, as well as many other financial luminaries from around the globe. Andy, we will talk to you next week. You be well.
Look forward to it. You too.
All right. Take care.